Hi, and welcome to Chapter 7. This is Learning Objective 2. And Learning Objective 2 is prepare a payroll register and maintain an employee earnings record. Now again, this is something like ADP or some kind of service provider will probably do in your company. You probably will not have to do it manually. But if it's a really small company, maybe you do have to do it manually. And it's always good for you to know how to calculate it, just to double check, because sometimes service providers make an error, but just know what's going on behind the scenes. So a payroll register, 2 primary records to keep track of payroll information for a company. A worksheet known as a payroll register shows all information related to an entire pay period. The employee earnings record is used to keep track of individual employees' payroll history. Payroll register usually includes each employee's gross earnings, withholdings, taxes, net pay, taxable earnings, cumulative earnings, accounts to be charged, and wage expense for that period. So here is an example of a pay register. You can see each employee is listed down the first column. This is for the pay period from October 13th to the 26th, and it was for the check dated October 29th. So W-4 allowances, single, married, and then how many allowances they've claimed. Their prior earnings, their year-to-date earnings that they've had. And then you're adding their current earnings to the prior year-to-date earnings. So we have our salary. So only 2 employees are actually salary employees. So this is their salary for, this time period, October 13th to the 26th. Then we have some hourly employees where the number of hours they worked during this 2-week period, the rate at which they're getting paid, and then you multiply that out, 78 hours times $11.40 per hour. So their paycheck would be $889.20. That would be the gross amount of pay. And then you would, of course, have deductions that you would have to calculate. So then overtime and their overtime rate to get that amount. So this is the gross amount they're going to get paid for this paycheck. You have to have deductions, that you may have deductions for insurance, for 401k, for taxes, of course. And there might be any other number of deductions that you may have depending on the company. But you take this gross pay and add it to your prior year-to-date earnings to get your current year-to-date earnings. Okay, so that's all this page is doing. It's just multiplying, and of course it's adding up a total down at the bottom as well. So when you do a journal entry, usually it's based on these ending numbers here. Okay, so an individual employee earnings record, a summary of employees' earnings, withholding taxes, net pay, cumulative earnings during each calendar year. Okay, so this lists their pay period. So this is for Stephanie Higler, her Social Security number. And these are the pay periods she has worked and during the quarter, I guess. And then these were the pay dates. So her hours she worked, and then the number of overtime hours, her regular overtime earnings, and her gross pay amounts. And then here is the federal income tax, the state income tax, the OASDA, FICA, the Medicare, medical insurance, and then the net pay. So this is the amount her paycheck is actually going to be each, I guess every 2 weeks. And then the check number, and then her year-to-date earnings here. Okay, so that is an employee earnings record. Okay, and that concludes Learning Objective 2.